My name is Krystal and I'm the CEO of SlickTrade.net. In this presentation, I'm going to go over part 2 of my Forex series, and we're going to go a little more in-depth with Forex terminology. If you haven't watched part 1, I suggest you go back to that before continuing with part 2. I'm just going to make sure my screen is recording. All right, good. Had a couple times where it was not recording my screen. So, here we go. Before we get started, as always, we have to start with a disclaimer. Feel free to pause the video and read through the entire disclaimer. But when trading any financial asset, there's a possibility that you may sustain a partial or total loss of your investment funds when trading. As a result, it is advised that you should never invest with or trade upon money which you cannot afford to lose through this manner of trading. Trading involves a real risk of loss. Past performance does not ensure future results. All right. So, types of currency pair quotes. Okay, there are 3 types of currency pair quotes. These include direct, indirect, and cross-currency quotes. Direct versus indirect. Okay, a direct currency quote is a currency pair where the domestic currency is the quoted currency. Euro USD, the euro equals the domestic currency, and the USD equals the foreign currency. An indirect quote is a currency pair where the domestic currency is the base currency. In other words, the inverse to a direct quote. Okay, so USD/euro, the USD would be the domestic currency, and the euro would be the foreign currency. It's just an inverse. Normally, you're going to see direct currency quotes. Okay. Cross-currency quote, that is the 3rd type of currency quote. When a currency quote is given without the US dollar as one of its currencies, that is a cross-currency. The cross-currency pairs that are traded the most are Euro GBP, Euro CHF, and Euro JPY. Bid and ask. Okay, you're going to see this. This is an example on MetaTrader 4 platform. Okay, but you're going to see a bid price and an ask price. All right, when trading a currency pair, there is a bid price or buy and an ask price or sell in relation to the base currency. Okay, so bid price does not mean you're buying, and ask price does not mean you're selling. Okay, it means, as far as the currency pair, okay, it means that you're buying or selling in relation to the base currency. Okay, so in this scenario, the AUD, USD, the base currency is the Australian dollar. Okay, so you're buying or selling in relation to the Australian dollar, the base currency. Okay, here the Euro USD, you're also going to see with some trading platforms, this is why I put this in here, you'll see like 1.4000/05. Okay, and I believe with most, if not all, MetaTrader 4s, they show up like this. They show you the full price here, okay? But you will also occasionally, or you may run into seeing it like this. And all that means is that the bid is 1.4000/05, so the ask is 1.4005, okay? So there's 2 different ways you may see it, okay? With the 2 trading platforms that I mainly use, I see it like this, okay? I don't see it like this, but that's all that means. Spreads, okay? The spread is the difference between the bid and the ask price. So in the previous example of Euro USD 1.4000-05, the spread equals 0.005 or 5 pips. Okay, so the spread is 5 pips. In this example here, the bid is 1.37320 and the ask is 1.37333. So the spread is 1.3 pips. Now, what is a pip? Okay, a pip, also referred to as a point, right, is simply the incremental change in a Forex quote. Okay, so 1.5000 to 1.5001 equals 1 pip. Right? With major currency pairs such as EU, GU, and UC, 1 pip would be equal to 0.0001. If you look at the UJ, you'll notice it has only 2 decimal places, 0.01. Okay, in cases like this, the pip simply represents the last decimal place. Okay, so 0.01. This is 1 pip, that last decimal place. You'll see with like the tri pairs, you'll see a lot more decimal places. Okay, many times. So it's just referring to that final decimal place. Margin and leverage. When a trader opens a position, they are required to put up a fraction of that position's value in good faith. Let me say it just one more time. When a trader opens a position, they are required to put up a fraction of that position's value in good faith. Okay, this is referred to as being leveraged, and the amount that is required to be put down is the margin. Okay, so I've been asked this question quite a few times, and it's difficult for me to explain it other than this way, all right? So, because many people, they refer to as the margin and leverage as being the same thing, and in a sense they are, but it's that amount that that fraction, basically, of the position's value that you're putting down, okay? That's the leveraged amount, okay? And that amount that is required to be put down is the margin, okay? So hopefully that explains it to you guys that have asked me that. An example, a 50-to-1 leverage ratio, okay, yields a margin percentage of 1 divided by 50, or 0.02, or 2%, okay? So with the 50-to-1 leverage, you're looking at 2% for that margin that you're putting down, okay? Brokers, okay? So it's time to open a demo account now that you've learned some basic terminology and then a little bit more in-depth terminology. These are things that you should know, okay? You should really, if you don't remember from the previous lesson or you want to go over this one again, just rewatch it a few times, write some notes. You should have a basic understanding of the terminology in the Forex market, okay? It's important to know what you're doing, when you're doing it, and why you're doing it, okay? The why is going to be your strategy, which obviously we have not gotten into yet, but before you do that, you want to open a demo and you want to play in that environment. I suggest opening a couple, and that will help you choose, which broker you want to go live with. And I always suggest to demo. I don't care if you're with a group. I don't care if you have a signal service. It doesn't matter, all right? That first month, at least the first month, should be demoing, okay? And if you're not in profit that month, okay, after you have a strategy that you want to use, then my suggestion is to go another month, okay? make sure you understand this stuff. Make sure you understand what you're doing and why you're doing it. Okay. It's free to set up a demo account. And the most of them usually fund, like $10,000 worth of play money. Now, if you're not going to open a live account with $10,000, I suggest that you when you're demoing in your account, you're demoing with the, based on the amount you would actually have in your live account. Okay, so if you're going to start with $500, don't use the $10,000 account like you have $10,000. Okay, use it like you have $500. Okay, or $1,000 or $2,000, however much you're starting with. Really know that you are going to be in profit, you're going to be breaking even, or you're going to be losing, okay, in a given month. Don't look at the daily, okay? There's going to be days where you lose. There may be even months where you lose, okay? But look at a full month, okay? Did your account rise 2%? Did it go in the negative 2%? Did it rise 300%? Okay? Did it go in the negative 300%? Okay? Make sure you get a feel for that and make sure you record that, okay? That's why I always suggest a trading journal of some form, okay? In choosing your broker, okay, each broker has advantages and disadvantages in choosing them. Things you're going to want to ask yourself in choosing a broker are, 1, are they regulated? 2, which country is the broker incorporated with? Where are they? Where's their main location? And 3, does the broker have live phone support 24 hours per day? The brokers that I prefer. I have multiple Forex accounts with different brokers. I've tried quite a few out. After a long time of demoing, checking reviews, utilizing the platforms that they offered, I decided to go with Oanda and Forex Broker Inc. Oanda is my all-time favorite. However, their margin is 50 to 1. FBI allows for 200 to 1. This is a nice feature when I had a smaller account size. Because of that margin difference, I was able to build up my account and then transfer my profit over to Oanda. Build up my account, transfer the profit to Oanda. That's just what I suggest doing, okay? I'm a very conservative trader. I trade, if, let's say there's $10,000 in my account, I trade it like there's maybe 2,000, okay? I'm a very, very conservative trader, and that's okay with me because I would rather build up profits in small amounts over time than go all in, have a bad, month and, and blow a bunch of money. So that's just what I like. I like Oanda and FBI, and they work very well together, in that sense. Every month, I take out the profit I made, put it over in Oanda. I trade a lot smaller lots on Oanda than I do on FBI. So, recap. What are the 3 types of currency quotes? They are direct, indirect, and cross-currency. 2, the cross-currency quote is what type of quote? It means any quote that does not include the US dollar. The bid and ask portion of a quote refers to what? The bid is the buy and the ask is the sell, not in relation to the currency pair, it's in relation to the base currency. Example, AUD USD. AUD is the base currency. Okay, so you're buying or selling in relation to the Australian dollar. Okay, 4, what is a spread? A spread is the difference between the bid and the ask price. What is a pip? A pip can also be referred to as a point, and it is simply the incremental change in a Forex quote. 2, what should you look for in a broker? regulation, location, live phone support 24 hours a day. 3, why do I suggest choosing a broker with larger margin? If you have a smaller account, choosing a broker with a larger margin can help increase your account size. Then withdraw the funds each month and transfer into a regulated U.S. broker if you are a U.S. citizen. Okay. 4, what homework do I expect to be complete for the next lesson? I haven't said your homework yet, but I expect you to have 1 to 2 demo accounts set up with different brokers that you have researched and install MetaTrader 4 on your computer and be ready to learn. Here's where I give the homework. So pick 1 or 2 brokers, set up a demo with them, download MetaTrader 4, and in the next lesson, we'll get in how to, well, 1, where to get MetaTrader 4, how to install it, so you may want to check out the next lesson, and also how to use MetaTrader 4. I'm going to break it into small lessons, just like I have this so far. So you guys have a good one, and I will talk to you soon. Please feel free to like, share, and subscribe. Talk to you later.